Job growth has picked back up in St. Louis, but not enough to stimulate significant change in St. Louis's apartment fundamentals. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Gateway City update. The good news is that St. Louis is seeing job growth hit a 9-year high. The bad news is that even at a 9-year high, the relative pace of growth is still below the U.S. average. St. Louis added 17,600 jobs in the past year, but that amounted to growth of just 1.3%. So because of that, the momentum in the job market wasn't nearly enough to stimulate much change in the trajectory of the St. Louis apartment market, which overall remains a bit volatile. Occupancy here always falls pretty deeply in Q4 periods, and that's exactly what happened again in 2014, down 80 basis points. Year over year, though, still up 80 basis points due to decent growth in the first half of the year. And that brought the overall rate to 93.2%, ranking among the bottom quintile nationally. And this is a market where it's not really about supply, brand, and occupancy. There isn't much of that, but generally it's just lackluster demand tailwinds due to a economy that just isn't generating much growth. Now, rent growth has also been a bit volatile lately, but generally underwhelming relative to the big growth we've seen nationally of late. In 2014, same-store rents for new leases climbed 2.7%. That's a little above the 3-year average for St. Louis, but far below the U.S. norm of 4.6% in 2014. And a further concern, we just aren't seeing consistent strength in what traditionally have been the better submarkets for St. Louis. Areas like St. Charles County and the Maryland Heights, Creve Coeur area, they had been seeing much better rent growth relative to the metro averages of the past few years, but they've been much choppier over the last few quarters. Another spot that we've seen that same pattern play out is Central West End, Forest Park, a trendier area for the metro, certainly a better spot long-term, better demand drivers with proximity to the jobs, and also some young adults who tend to rent in the trendier neighborhoods, but it's also one of the few areas that's seeing a decent amount of supply hitting that submarket. So what's the challenge? Well, beyond the economic side, the other headwinds here are demographics and single family, speaking of the St. Louis metro overall. Demographics here are a bit older and generally bent more towards single family housing, and plus, on top of that, single family housing is cheap. So the homeownership right here is far above the U.S. average. In fact, 70.7%, 630 basis points higher than the national norm. And with those structural headwinds, St. Louis remains much more of a strategic market where it's more of a site-by-site play rather than a market where we see broad appeal. We do not think that overall the structural themes will be shifting much over the next few years, so we expect occupancy and rent growth to remain subpar relative to the U.S. averages. And that's going to wrap us up for St. Louis. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.